This lesson shows how an existing business can create their financial projections. Come in to write your plan and come down into projects. Now, an existing business has ongoing revenues, ongoing cost of goods sold, and ongoing expenses. And so the first thing that we're going to want to do is document those. Let's see how to do that. We take our first project. Let's call it current business. And let's say it starts next month. Let's say we're doing our plan for a year. So let's get out to September 30th of 2015. So because we've been ongoing for a while, we'll have a good understanding of what our ongoing monthly revenues are and monthly cost of goods sold. And there's two ways of entering these values. The first is simply to enter an overall value. We know that we've got $25,000 a month in revenue, and we have a 20% cost of goods sold. And as soon as we do this, you'll start to see in financial reports, in the income statement, the financial projections start to come together. There they are for the entire next 12 months. Now this may be sufficient for you, so great. But if you'd like to see the detail that goes into making up that $25,000, then you can simply move over here and click on the notes icon. And now what you can do is enter in all the products and or services that make up that $25,000. Let's go down here to design hours. And you know that you regularly have 50 design hours a month, and you charge $120 for each of those design hours. And in addition, you have production hours. And we're going to do 190 of those at $100 an hour. And you can see that it adds those up and then puts that value in here. So there's our $25,000 in revenue. Click Done. Now let's go into our cost of goods sold. And we know that for each of those production hours, so I've got a production cost here. So each of those production hours is going to cost me about $25. So not quite $5,000. And done. I also know that over the course of the year, we'll grow this, but it's reasonably slowly. At the end of the year, we might have a total of 10% year-over-year growth. And so we can put in there 0.8% growth a month in each area. Similarly with my general and administrative, my R&D, and my S&M, my sales and marketing expenses, I can either put in a single number or I can click on the notes icon and start to record each account, and you'll get these accounts from your financial statements. So you can see here we've added communications, travel, and a couple of salaries in there. And what we do with the salaries is we put the amount and then we tell how many staff make up that salary. So here's one administrative person and then one management person, and you'll see how this staff count shows up on our financial statements and our worksheet. All right, then I'm going to add some sales and marketing expenses, another salary here. We've got a marketing support person. And done. All right, let's go and take a look at this in our financial reports. There's our income statement, current business, all the revenues, cost of goods sold, with all the expenses, all nicely summarized. If we want to see the detail, we can go into the worksheet And you can see there are the design hours and the production hours that make up the current business's revenue. And there's the production cost, cost of goods sold. And then here are all the expenses broken down by the accounts or categories that we had defined. And then right down at the bottom, you'll see that we have a staff count, and that comes from the staff column in the notes screen. Now let's go back into Write Your Plan. And let's add some product development there. We could just run the business right now and it would make a nice little profit by the end of the year. But we have some cash in the bank, and our customers have told us that they want us to create another little product. So let's go and do some product development. And we're going to start that in, let's say, January. And we think it's going to take 3 months. We're just going to subcontract that out. Okay, it's not going to affect revenues positively or negatively, cost of goods sold positively or negatively. It is going to affect our research and development. Product designer. And that person's going to cost, it's going to be about $2,000 per month. They're not staff. Now we got a product developer. That's going to take about $4,000. I'll make it $5,000 a month. We're going to hire a project manager, part-time, and that'll be it for the moment. But we also are going to need to do a little bit of consulting work up front, or hire a consultant up front to help us define the project. Okay, done. Okay, let's go take a look at our financials now. So you'll see in the income statement, all of a sudden we have some research and development that's been summarized in those 3 months. And we'll go through to the worksheet and we'll see there it is broken out for those 3 months. Let's go back to write our plan. And we're going to add one more project, and this is going to be a marketing campaign for the new product. Now, I'm just going to show you a bit more overlap. We're going to start the marketing campaign a month before the product is actually ready to go. And we're going to run this campaign for 3 months. Let's say 4 months till June. Okay, in the marketing campaign, we're going to start off here with a product kickoff. And we'll spend some money there, $2,500. Whoops, $2,500. That just happens one time in the first month. And then we're going to expand our marketing campaign by creating an AdWords campaign. And mail it to existing customers. We think what that'll do is it'll crank up some revenue from our new product, whatever you want to name it. Ongoing, we'll probably sell 50 of these, and we're going to charge $95 per. And there's a new product cost, and we'll again 50 of those, and it's going to cost us $25 on an ongoing basis. But we also think that we'll take some pre-orders here because of the kickoff party. And we think we might sell, I don't know, let's say 100 one time, and we'll take those at a sale price. So we can show sales a number of different ways. Let's do this. And then we've got new product discount. $20 like that. And then we got the new product cost. And that was $25. And then click done. Again, back to the financial reports. And you'll start to see the marketing campaign come online with some new sales, cost of goods sold, and then some additional costs. So you can see how these things layer on top of each other and all come together and are summarized beautifully in your income statement, which then leads to your statement of cash flows, show you how much money you have or don't have, and then leads to your balance sheet. Now, the last thing I'll show you as an existing business is you probably had some cash as an opening balance. And so by clicking on loans, assets, and investments, and then going down to opening balances, you can tell StratPad exactly how much cash you had in the bank on the day prior to this business plan starting. And as soon as you do that, let's go back into our financial reports, and there you see the cash is now properly reflected. And on our statement of cash flows, you see that you've got enough cash to see yourself right through to the end of the year. So the lesson, if you're an existing business, set up one project that covers all of your baseline revenues, cost of goods sold, and expenses, and then add in additional projects for each campaign or project or phase that you expect to undertake in the period of this particular plan. And let StratPad bring all these together in your financial projections and the worksheet.